the GRT is very much like a regular sales tax, and when outside companies are thinking of locating here, they hear GRT and they get scared, but everybody's used to the term sales tax. So the question is, what's the downside of just renaming the GRT sales tax?
There's no downside to renaming the GRT sales tax. I don't think it would be a problem at all. If you didn't make any changes to your tax as you rebranded it, you might be accused of not actually doing anything, and you would be guilty of not actually doing anything, but trying to improve your appearance. The fundamental weaknesses to the structure would still be there, and that would be the problem.
So what's the easiest thing that could be done along with a name change that would go across the board without hurting very many people and still keep it revenue neutral?
Well, the taxation of business services, B2B services, business-to-business services, is what I would, not only because it renders our own service providers uncompetitive with out-of-state providers, but because of what it does to all of our businesses and their cost structures, I would do that. The problem is, and that would be simple to do, and there are some complications I mentioned earlier, but relatively simple. The problem is it would narrow your base and it would cost money, and so the angst and the gnashing of the teeth isn't going to come from saying, oh yeah, we shouldn't tax B2B services, ask anybody. Then that will come when you're starting to talk about what the offsets should be, how to raise the incremental revenue you need to cover the narrowing of your base.
And would that come from eliminating exemptions?
It could. The dirty little secret, you always hear these numbers thrown out, billions of dollars in the form of exemptions and deductions, and there are. But most of those that comprise a lot of money are things like sale for resale deductions. So the wood that goes into your wooden horse. No, you don't want to eliminate those. Those are not bad exemptions and deductions. Those are structural exemptions and deductions, and you want them there. And unfortunately, the ones that are more obvious victims tend to raise very little money. Stuff that was clearly done for some special interest, there's just usually not that much money attached to it. Mm-hmm. So repealing those doesn't buy you anything, and repealing something like a sale for resale deduction would be stupid. That would be counterproductive. So it's hard to find things there. Now you can look at an appropriate tax base and say, we shouldn't have carved out, why we have a carve out for kickboxing, for instance.
Is there such?
Yeah, we have our governor liked pugilism. It covers kickboxing, martial arts, athletic events of certain kinds. But there's just not that much money on the table. So why, so it sounds very sexy to do that. I can tell you where some of the money is in our exemptions and deductions. Nonprofits, no one really wants to tax nonprofits, at least not, maybe in certain respects, but not, that's a big one. Dividends and interest, because our gross receipts tax is imposed differently than most general sales taxes. It's imposed on your gross receipts from selling property, leasing property, performing services, etc. So basically anything you do is gross receipts. So I get a W-2, for instance, but am I performing services for consideration? I am. That means I have gross receipts. And if we don't have an exemption on wages, then I pay gross receipts tax on my salary. And no one thought that was the intention, that was never the plan, so there's an exemption for that. But the idea was you impose your base broadly, and that way as stuff tends to pop into it, this was the genius of the original design, it's already in your base, so you don't have the political fight over can you drag it in, it's the political fight over should you carve it out. And that's a little easier place to be. And so in that respect, our broad imposition is good, but it confuses people because they see these exemptions and those high dollar ones like wages. Well, no one ever intended to tax wages with our GRT. The Sher-Taylor proposal does propose to do that, and that's how it replaces the income tax. You repeal the income tax and then you pay GRT instead. That would be viewed as weird to the outside world too, but it might work at the end of the day. You'd still have to have a withholding regime. It would look essentially the same, and the rate that you paid ultimately might be the same because you would pay a lower rate with fewer exemptions and deductions, because right now at the state level you benefit from all the exemptions and deductions that you get at the federal level, and those would all go away presumably. but your rate would go down also. So, whether my tax actually went up or down, it's hard to say. It would be dependent on your personal facts, but and what the rate would have to be under the Sherrod-Taylor proposal, which we still don't know. But when I mentioned a less ambitious approach, that would likely include maintaining the exemption for wages and maintaining the personal income tax as we know it today, which is just a piggyback off the feds. And there's some administrative benefits to doing that, and it's not weird. It's quite common, in fact.
Some states have got pretty high sales taxes.
Mm-hmm.
Some have none. They make up for it in other methods. If we went a quarter of a point up from 7 to 7.25, and we eliminated the pyramiding, do you think that would be revenue neutral?
Probably not.
What increase would it take?
Oh, from the hip, it would probably take 1% or 2%, which I think is probably too much.
So it'd be 8 or 9%. Okay.
Maybe a little less than that, but it would cause us to have a fairly dangerously high sales tax rate. Once you're climbing into the 8, 9, 10% range, it's very high.
Do you happen to know what the national average is for sales tax?
Not off the top of my head. I can look it up. In fact, I have a card on my desk that has it. But
there you go.
We're slightly low. We look kind of like everyone else. We've caught up to a lot of other states. But that ignores the fact that we tax a lot more things in the area of business consumption more than anything else. Mm-hmm. And the other problem with that I didn't mention earlier is it really discriminates against not only maybe the way you do business, but small businesses in particular. And that's some of the distortions that we talked about, which are never healthy. It's like putting sand in your motor oil. It's just not gonna make anything better. What happens is if you're a large company, you can in-house a lot of those services. You don't have to outsource them. But if I need, I have an accountant and bookkeeper that help me because heaven forbid I screw all that up also. I don't have the capacity to hire a full-time bookkeeper and put him on salary. I have to go hire someone external. That means 7% upcharge. If your business uses temporary services, shame on you, 7% upcharge. And if you don't realize this, you'll disadvantage yourself without even knowing it. And you're already paying the compounding effects of the pyramiding. But if I'm Centex Homes versus small-time spec home builder, I'm going to have an architect on staff. I'm going to have 2 or 3 people in the accounting department right here in Albuquerque. I'm going to have a lot of these different I might provide my own security. I might provide my own sanitation. I might provide a lot of these things that as the smaller guy is going to have to outsource. Now, even if you don't have to, if you do it because it makes sense to your business otherwise, you're hurting that business if you force them to do it differently. That's the trend towards vertical integration and things like that would keep you from paying those taxes and make you a more tax efficient organization. Doesn't necessarily mean it's efficient for any other reason. And so the tail wags the dog. Maybe it makes more sense to use a temp provider, but you can't. Maybe it makes more sense to hire an attorney or a local attorney, but you don't. Or you do, and your competitiveness suffers. That's not a good thing.